and welcome to the CNBC-TV18 Mumbai studio. I'm Ekta Batra and you're watching your stocks this afternoon. Well, it's turning out to be a session where we have recovered quite significantly from the day's low, considering that the global cues were largely weak. But as of now, we're just about flatline, both for the mid-caps as well as the bank nifty. Let's see whether we manage to see any further buying on dips and maybe take it into the green towards the close of trade. Joining us today, we have Rajat Bose of rajatbose.com and Vijay Chopra of enochventures.com to answer all of your queries. Rajat as well as Vijay, welcome to the show. Well, Rajat, before we get talking about all of the queries that we have, just wanted your thoughts in terms of how you would approach today's trade. It's a bit choppy, but we've recovered from the day's low. Is it indicative enough of probably taking longer positions?
Well, first of all, thank you for having me and good afternoon. If I have to talk about the market, I would do a comparison. That is, you are now looking at 66 points Nifty down, 21,675. And the bank Nifty is only 32 points up. Whereas, I'll give you the other picture. Other picture is the Nifty Junior, which is the Nifty Next 50. That is 284 points up. So the weakness that you find, that you see in the Nifty is actually driven by the bank Nifty, or more so the largest weight stock in both the indices, Nifty and bank Nifty, that is HDFC Bank. And because of HDFC Bank's weakness, you are now seeing this kind of a weakness, or more so, there are other bank stocks also in the Nifty, and that are creating problems. But when you look at the Nifty Junior, that is giving a completely different picture. Regarding the bank Nifty, I would say that if it were to fall below the 200-day exponential moving average, which is currently around, say, 44,693 or 44,700, if it were to fall below that, there would be problems. And regarding the Nifty, I would say that 21,600 to about 21,575 is a major support. Till such time that is broken, I think there can be a small rise. But so long as the Nifty doesn't cross 22,000 mark, you can't really have a upswing going on. That's my assessment of the current market situation.
Okay, so 22,000 becomes critical in terms of a level for the Nifty. Well, let's get queries now. We have Shankar Raman, who writes to us from Mumbai. He holds 50 shares of Bajaj Finance, which he's bought at an average cost of around 7,598. So he's sitting on a loss here. He's a medium to long-term investor, wants to know what to do, whether to book his losses or to exit at current levels. Well, it's been a year, Vijay, of a lot of questions with regards to financials. And, you know, these frontline Nifty stocks, say something like even an HDFC Bank. But what would your call be on Bajaj Finance? Okay, Vijay, I think you're on mute. If you could unmute yourself.
Extremely sorry, Ekta. So it's been definitely a topsy-turvy year for most of the private banks and NBFCs, where we have not seen most of the companies going anywhere, barring the PSU pack, where we have seen a lot of fireworks. So I would say that, you know, if I see the technical charts, there's a death cross in the making. So this company might struggle a bit. But again, coming back to the point, it's a quality company. If you are a long-term investor, so don't worry. You know, hold with a stop loss of 6,200, and there are good possibilities it would come back, because you know there are times when good companies stay put for a while, and then they suddenly go up. We've seen in the case of TCS and most of the IT companies. So it's a quality company, no doubt about it. There might be a few quarters which are not expected as per the market, but yes, Bajaj Finance, I would say, long-term investors, stay invested with a stop loss of 6,200. And yes, if you are a trader, you want to get out, then get on a rise. You know, if at all you get the stock at about 6,800, 7,000, exit.
Okay, all right. And technically, what would your call be on Bajaj Finance, Rajat?
Well, even I also see the date cross, and some of the date crosses have already happened on the daily chart, like 50-day exponential moving average and the 200-day exponential moving average. Death cross has already happened. So there is a possibility that it might actually go down. But 6150 to about 6,000 is where the 200-week exponential moving average is located. So long as that is not taken out, there will not be a major fall. But what worries me is a classic head and shoulder pattern on the daily chart. And that has happened since July. I mean, even before July, it has started happening. It took time to build. Now, uh, the neckline has been broken and it is trading below that. So there is a possibility that it might test 6150 to 6,000. So if one were to get out of it, I would say either you get out below 6,000 or on a some kind of a rally, corrective rally that happens and it goes up to say 7,000 to 7,200 kind of levels, then exit.
Okay, all right. So that's the technical call coming in on Bajaj Finance. Let's get in another question now. Satvika Kistipati writes to us from Pune. She holds 500 shares of Bandhan Bank, which is bought at an average of around 224 rupees. She wants to know what to do, whether she should hold or sell at current levels. She's sitting on a loss at this point in time. She's bought around 500 shares. Well, what would you recommend on this particular stock? Because, you know, her buy price is even closer to the 52-week high of around 272 odd rupees. So in that context, Rajat, what would your recommendation be? Do you think that the charts probably say that there could be a move up towards those levels?
See, if you look at the weekly chart and if you look at the kind of weakness that weekly chart is showing, daily chart, there has been mayhem in the recent past and with a lot of volume coming in. And the weekly chart suggests that even if you were to do bottom fishing, maybe the low that happened around the COVID, that is 150 or so, those kind of levels might come if Nifty and the general market weakness comes in anytime. And this stock is not signaling any kind of bullishness, even of the 200-week exponential moving average, 200-day exponential moving averages are all going down. It is better to exit this company.
Okay, all right. Better to exit the company. Well, the numbers, post the numbers, there were, you know, some amount of lowering of EPS estimates, target prices. Vijay, from that context, what would you do? How would you approach Bandhan Bank? There's some negative news floating around as well on that.
Well, Ekta, I would second what Rajat sir said, that, you know, I do not see any strength. There has to be a reason why a bank would go up, either numbers or some future projections or some kind of guidance from the management. Neither of them are there. So, you know, if at all I have to buy a bank, why not go and buy a HDFC bank rather than being in Bandhan? So I would recommend exit on rallies. The stock looks weak. There are plethora of banks which have come up. You know, there are few IPOs which are still lined up, you know, small finance banks like Jana and all. So, you know, banking is now not a forte, you know, post Paytm, what we have seen, you know, in the small finance banks and, you know, small banks. So I think that making money in the banking space is now becoming increasingly difficult. The spreads have gone low, abysmally low. And the real estate costs are pretty high. The salary costs are pretty high. So again, you know, gone are the days when the banks used to lend left, right, and center. So the lending mechanism has become very, very tight. So I would say that with a bank like Bandhan, it's better to exit on rallies. And if at all you want to be in the banking space, be with SBI or the top-run banks.
Okay, all right. Be with the top-run banks, State Bank of India. So that's the fundamental call on a query on Bandhan Bank. Just want to point out that NATCO came out with a very good set of numbers, and that's primarily to do with Revlimid generic as well, because that's been fueling numbers on a year-on-year basis. They were the first to launch all the way in March of last year, and that has really aided the numbers. As you can see, the stock is up around 4.7%. Most of the street has estimated that they, in fact, underestimated what Revlimid generic, the blockbuster cancer drug, is doing to numbers for multiple companies, and NATCO would be one of the beneficiaries from it. The numbers, the stock reacting higher on the back of what has been a great margin performance on a year-on-year basis. We'll take a short break, but up next, we'll answer more queries on the other side. Stay tuned. Welcome back. You're still tuned into Your Stocks. We still have with us Rajat Bose and Vijay Chopra to answer all of your queries. Well, let's get in another question now. We have Ketan Singh, who writes to us from Chandigarh, who he holds 350 shares of Yuko Bank, which he's bought at around 59 odd rupees. He's asking whether to remain invested in this particular stock or sell it at current levels. So he's bought it. You know, he's absolutely flat in terms of his performance at this point in time. So, Rajat, over to you on technically on this one. Do you think that maybe there's further upside, or do you think he should probably exit or look at some other PSU stock then?
Well, among the public sector bank stocks, I like PNB. But to talk about Yuko Bank, I would say that it showed a very vertical rise from about 40 to 70. And after that, it has started coming down in a correction. Now, currently ruling at 57.80. But here, fresh purchases should not be made because already it has gone up this vertical rise. This is the third vertical rise. So I would suggest not getting into Yuko Bank. Maybe PNB would be a better deal. But generally, I would say that if you can wait, if the investor can wait, then there would be great opportunities to buy bank stocks at a lower level. And one particular bank stock I'm quite bearish, that is HDFC Bank. HDFC Bank will go much further down. Do not attempt bottom fishing at this juncture, because what I see on a HDFC Bank chart, that there are indications that there could be further fall. The weekly chart, the monthly chart, all have become quite deteriorated. So avoid banks for the time being. It would be better.
Okay, all right. Well, Vijay, would you have the same view? Yuko, you know, there was strong loan growth this quarter. There was some amount of NIM stability as well. In that context, what would your call be on Yuko?
Well, if I look at the total market capitalization of Yuko Bank, it's reaching close to about 69,000 crores. Again, you know, for a bank like Yuko, I would say that this valuation is a bit stretched. Secondly, what I watch in a balance sheet is EPS growth. Is there any EPS growth in the bank? So that would be my watch list. So among the public sector banks, I think that Bank of India is one of the best placed banks. Has corrected quite a bit and hasn't moved much. So as Rajat sir said that Yuko has moved up vertically, and yes, it has, and we see a huge market capitalization change in the last 3 months. So I would say be with the banks which are showing an EPS growth. I think that Bank India is much better than Yuko Bank, and so I would recommend that exit on rallies should be the call for Yuko. And I completely second Rajatji that you can go into PNB as well, but my first pick would be Bank of India.
Okay, all right. Well, let's get in another question now. We have BML. R. Mulidharan writes to us from New Delhi. He holds 725 shares of BML, which he's bought at 1122. So he's sitting on a profit on that one. He wants to know what to do, whether to book his profits or to stay invested in BML. Well, Vijay, BML, interestingly, very weak set of numbers this quarter where there was a sharp margin contraction which took place. But do you think that maybe future earnings will probably see some recovery and this is an investment to probably stick in or book some profits, considering that the investor is sitting on handsome gains?
I just mentioned that there has to be a decent EPS growth. So if I look at the EPS of March 20, this is 15.35. The TTM EPS for 24 is 43.92. Last year, it clocked about 37.96. So there is a EPS growth which I see in the balance sheet, which is good. Secondly, there's a defense play. And, seemingly, next elections are around the corner and BJP probably, would win. This is what the market is also discounting. So their focus on defense and making India a 5 trillion economy is quite intact. And they're going to put all their efforts to back the defense companies or companies involved in manufacturing of defense equipment. BML is also one of those. So I would say that stay invested. So don't panic. These companies like HAL, BEML, BDL, there might be certain small corrections or maybe a couple of bad quarters, this doesn't mean the story is over. I think that, this company can go up considerably. We might see maybe even 4,000 or 5,000.
Okay, all right. Well, we're going to leave it on that note. Thanks, gentlemen, for joining in and taking us through all of those queries. That's all the time that we have on the show. But do remember to email us your questions. We'll address them with our experts.
मेरी कहानी की